A very good morning, guys. Yesterday, the proprietary desk long got paid. Sensex expiry settled at 77,928 under the 78,000 resistance, and the desk that flipped long into the Fed collected it completely. But here is what the green screen hides. A big slice of that climb was not fresh buying, it was bears running for cover. That was short covering. The foreign funds bought back 8,206 short futures while quietly loading up on the puts. Some green candle, two very different engines that drove it. And today is the last time this market settles the old way because on Monday the close itself changes and the cash is applicable. This is the Tanmaj. You are listening to episode number 93. I am Tanmay Gurdogoti. Let's go. So, starting with the board, on Sensex expiry, the index closed at 77,928, up 273 points, holding above 77,700. The whole session and the drifting into the 78,000 resistance, exactly the pin math path we mapped last episode. Nifty finished 24,317, up 67 points, reclaiming that 24,200 to 24,250 zone. Bank Nifty lagged a roughly flat near 57,100, and the fear gauge India VIX ticked up a notch to 12.16. So the calm held but did not deepen. But here is the tell you only see if you look under the tape. On Nifty 50, 25 stocks went up and 25 went down. A dead heat. Step out of the broader market and it was red. The mid caps, small caps both closed lower. The small cap index off about 0.7%. So this was not a broad based rally, it was a narrow one. Auto carried it. The top sector up 1.63%, with Maruti up 1.77 and M&amp up 1.73. After M&amp posted a 34% jump in the quarterly profits to 5,500 almost. Tech Mahindra and Reliance and SBI helped, but the realty fell over 2%, chemicals over 1%, and Adani Ports dropped more than 3%. The words the desk used were short covering and bargain hunting, not conviction. And that matters because a rally powered by short running for a cover has a very different shelf life from one powered by new money. Now the positioning, guys, and this is where the story stops being feeling and becomes a fact. This is the official participant data for yesterday. Foreign funds walked into Thursday carrying a net short of 1,94,000 index futures. They walked out by 1,86,000. They bought back 8,200 and six short contracts. That is covering right there in the numbers. But watch what they did with the other hand. In index options, they are now sitting net long 4,40,000 puts and net short 1,76,000 calls. Translating that, they covered the future short, but they bought downside protection and sold away the upside. That is not a house turning bullish, that is a house taking its foot off the short and reaching for a helmet. That is, they are just short covering and adding insurance. The pros or the proprietary desk leaned the other way, but gently. Net long the futures by a small 3,566 net long, 1,32,000 net long short calls and short puts, a mild long tilt. And the retail client, they were the ones selling puts. Net short 4,70,000 puts on them and long futures. So the retail crowd is underwriting the downside while the foreigners are buying it. When the smart money is paying up for protection and the crowd is selling it to them, you pay attention to who is on which side. And in the cash market, the split told the same story. Foreign funds bought 3,623 crore of cash, but the domestic institutions, the steady bid all the month, sold 1,864 crore into the strength. On the 29th, both were buyers. On expiry day, they split. With when one leg of the support is booking profits, you do not chase blindly. Now the overnight and it came in friendly. Wall Street closed firmly higher, technology out in front. S&P and Nasdaq up strongly, and the America 10-year yield eased to about 4.65%. Asia this morning is broadly green. Japan, Korea, Taiwan all higher. Hong Kong, the lone laggard. And Gift Nifty is pointing to a gap up open near 24,420, roughly 100 points above yesterday's close. So the tape is handing us a positive open straight into the resistance where we are right now. And here is the other gift, guys. Crude came off. Brent eased back to $85 overnight, down from 91. It had spiked on the Iran and the Red Sea scare because no real escalation actually landed. For an economy that imports most of its oil, crude sliding back is a tailwind, not a tax. Gold near 40,090. The dollar index eased and the rupee steady near 95,70. So the macro that was a headwind on Thursday flipped friendly overnight and the tape opens with a tailwind at its back. So, how do you tell in real time whether Green Day is real buyers or trapped bears? You watch one number next to the price, open interest, the count of live contracts. And here is the rule, guys: price up and open interest up means new money is coming in long. That is conviction and it tends to follow through. Price up and open interest down means old shorts are closing out, tends to follow through. Price up and open interest down means old shorts are closing out, buying back what they have sold once they are done. The fuel is gone. Same green candle, two different engines. Thursday was the second kind. The foreigners covered shorts while quietly buying puts. So Friday's job is simple to state. If the follow through comes up, rising open interest and fresh longs, the buyers are real. If the price grinds while the open interest bleeds, it was the last covering and you fade the strength. So the plan is extremely simple, guys, and it runs on the new week chain because expiry wiped the old books. On fresh 4th August options, the put writers have built a support. Heavy put OI sits at 24,000 and 24,200. That is your support shelf. The call writers have built the ceiling, a fresh ceiling piled up about 31 lakh contracts of calls and 24,500 and nearly as many as at 24,600. So that is the resistance. So max pain sits at 24,300, right where we closed around. The options are pricing a weekly move of about 220 points, a one standard deviation band of roughly 24,100 on the downside to 24,550 on the upside. So this is the box, guys. You have to trade for the August expiry. Above 24,400 and pushing towards 24,500 on rising open interest, the real buyer showed up and you ride it. Lose 24,200 opens the 24,100 put support, and below 24,000 the covering is spent and you respect the downside. On Sensex the same idea. 78,000 is the resistance and that must convert to a floor, which would happen today. 77,500 is the next support and we gap straight into the decision zone this morning near 24,400. So the first hour is the tell, a clean hold about 24,350 to 400 with crude easing and Wall Street saying the buyers finally arrived. A rally can happen towards 25 24 550 and a fade back can happen if 24 400 is not held to around 24 300. Says it covering all along. Trade the level, not the story. And the booked today is the last trading day settled the old way. From Monday, 3rd August, SEBI switches every stock with futures and options to a single closing auction price discovered in a short window at the end of the day and matched where the volume is heaviest with a random cutoff so nobody gains the last second. This is the final Friday of the 30-minute average close. So you have traded your whole career. From Monday, that end of day auction window becomes the new pin zone, and the first few sessions under the new rule are always the noisiest. And our own rupee case all cap book rebalances that Monday too on a narrow large cap led by led like Thursday. An equal weight basket gives a little back, exactly what rotation day looked like yesterday. So scorecard of Thursday, the pros long got paid roughly a 4 out of 5. Full scorecard is available on rupeecase.com. That is your edge for today, guys. The pros collected on expiry, but the climb was covering as much as conviction. And even with crude easing and gap up open handed to us, the same funds that bought puts yesterday can sell it. So today, the last day of the old close, has to prove the buyers are real ones before Monday changes the rule. This was the Tanmay Edge. If you found value in this, guys, please share it with one trader friend who needs it right now, and listen it live on Apple Podcast, Spotify, or Amazon Music, or rupeecase.com, where it streams first. And give it a rating, guys, and a review if you want to add something to the podcast.